When you're selling Apple, here's who you're selling it to. One of three people.
Yeah.
The SPY, which is under accumulation every single day. It is the predominant retirement vehicle for almost every American.
WB.
Warren Buffett is the other person you're probably selling to. Best of luck with that. Or the company.
Yep.
The company has, I don't know, 130 billion, 140 billion amount allocated to buy back their own stock over the next few years, and they retire that stock. So as this stock goes back to a new all-time high, does not mean a new all-time high valuation. They're not issuing new shares, and the float does not remain static. They're shrinking the float. So actually, it can make new highs in price without having a more and more egregious valuation, even if you don't agree that there will be growth for the company, which they continue to find ways to grow. So you could sell to Buffett. You could sell back to the company as they obliterate that share that you used to own, or you could sell to the buyers of the SPY who will continue through 401k, et cetera. You're welcome to do that, but that is literally what you're doing when you get out of the stock because, quote unquote, supplier issues in China or tariffs or whatever you want to do.
Somebody who got out of Apple.
I've gotten out of Apple multiple times in the last couple of years. And listen, on the other side of it, I'm long Apple and hedge funds. But forget that. I'll own a lot of poor trading in Apple. To Josh's point, let's say you bought the stock in 2014 and you didn't have the bad behavior in the stock that I did. You just held the stock. You're a double in the price of the stock.
Right.
And if you bought 100 shares, those 100 shares are now 125 shares.
Why the heck do you try and trade it?
Well, as I said before, I own the bad behavior in Apple.
I get it. Whatever.
I've made some mistakes in trading Apple, but let's not make the focus of the conversation why I screwed up on Apple.
No, it's not. It's not about you. It's about trading it versus owning it.
Because it's so tempting. Because it's so popularized. I think a lot of people, it's in the headlines all the time. There's a belief. Just a couple of weeks ago, it fell because people believed it was going to be weaponized in the trade dispute. But I think underneath it, this buyback, this capital allocation story, which I tried to emphasize at the end of last quarter.
As you usually do. You're like the Mr. Buyback.
But Apple is the greatest capital allocation story. They have reduced the size of their cash from $200 billion. They've done a debt offering of $100 billion. The last 4 years, they've gone from buying back $90 billion a year to $400 billion. That's an unbelievable buyback story.
You know who should get some credit for that and doesn't? Obviously, Tim Cook's done a great job, and, on design, Johnny Ive, et cetera, et cetera. But Carl Icahn really forced Tim Cook to get some religion about shrinking the float. And that took place at a time when Apple and many other technology giants were reticent about buybacks. And really, capital allocation was very far from what they were thinking about on a day-to-day basis. They were always thinking about innovation and product cycles, and all of that makes sense for them to think about. But I do think that Icahn deserves a lot of credit for starting that process. And now that that process has started, and he's not really a factor anymore, what Tim Cook and the gang have learned is that there are going to be years where Apple doesn't have the hottest new phone coming out at the right time to satisfy shareholders. But they could buy in 5% of the float and make up for that. And they've done it. And I think it's worked really, really well to get you through those gaps when there isn't a hot new Apple product coming out, which I think we could all agree is the period that we're in right now.
Are we 233, right? 233 and change is the all-time high. Is that now where we're headed?
Well, that's only 10% higher. So, yes, barring a severe deterioration in the U.S.
keeps going up.
Yeah, well, exactly. And what will make both Apple and the market go down is a severe deterioration in the U.S.-China relations. You talked about weaponizing Apple, which could happen in a severe deterioration. But one other force that's propelling this higher, and I've got to say there's more forces propelling it higher than there are propelling it lower, is you're going to enter the back third of the year here. And taxable investors are going to look at this up 45% year to date. They're saying, I don't want to sell this. I don't want to take a tax on this in the last third of the year when I feel pretty comfortable I can at least bridge it into 2020. Now, it's a little bit early to talk about that phenomenon, but it's not very early, just a little bit early.
Yeah. Let's bring in our own Steve Weiss, who says he added significantly, that's his word, to his Apple position today. Steve, you're there?
I'm here.
So the stock's had an amazing comeback,
Apple.
and you went in again today.
Yeah. So I did own it. I've been critical of Tim Cook in terms of his capital allocation.
Yeah, right. We don't even listen to that anymore. But anyway, why'd you buy it?
But forget about that. So I'll give you 5 reasons for it. I like the fact that Cook continues to have the ear of the president. He's one of the few people that can walk both sides. He transferred some production recently to China, but yet he still has Trump's ear, and Trump spoke positively about the arguments he made and the competitive disadvantage that Apple would suffer to Samsung if they continue with the tariffs. That's number one. One of my major concerns about Apple, or criticisms, is that historically they've been very arrogant in their launch of competing technologies such as functionality on phones versus the competition. So in other words, they relied on their brand to unseat the competition when they came out with a camera that Samsung came out before. I'm noticing a decided change in this strategy because they've recently become more aggressive. They bought Intel's modem business, and that will allow them to get their 5G launch quicker. 5G had been a concern. We didn't know when they would launch 5G phones, and I think 5G will be the biggest upgrade cycle that we've seen in many, many iterations of the iPhone, and bigger than what had been expected for the iPhone 10, but didn't occur. So that will give you some comfort. Anybody who looks at slowing sales of iPhones, you're not going to be concerned about it because you're going to be looking to the launch of the 5G phone. So that's one thing. I'd also had concerns about the budget that they were putting towards streaming. It was going to be $1 billion. Now, if reports are true coming out of Europe, that's now $6 billion.
Yeah, well, they seem to be disputing, at least to an NBC reporter, that number. But your point's well taken. If it's more than what you expected, I get it. What about the notion of what Josh said earlier, that it's sort of sell this thing at your peril? You're either selling it back to the company, you're selling it to Buffett, or one other place. And this is a stock you own, you don't trade.
Well, when you sell a stock, it's always where you put the capital. So if you have a better idea, Apple's not always the best performing stock. However, I agree. It's a steady stock. It always has a place in the portfolio. And there are better things that are happening to it. So let me just give you another point, two more points here, which I think are important. They came out in line with the aggressiveness. We didn't know what the pricing was going to be. They traditionally don't reveal pricing until the product comes out. We saw that with the news service, et cetera. They released it today, apparently. And the importance of that is they're not waiting to unseat something from the competition. They're going to head-to-head with Disney. And then if you take a look at a long-term chart of the company, of their stock, you will see that they've always outperformed down markets, and they've always outperformed the indices. Now, we make a big deal of it being up since the bottom in January, but if you look at the gap, it's closing the divergence, and this can go again to not just forget about the multiple, but to an outperformer consistently versus the averages. And I think that's very important. The gap was tremendous. So I do see the stock making a new high. I do like the fact they're buying back shares because that increases your earnings per share without having to have the growth. So for all those reasons, I added to it significantly. It's one of the stocks I feel better about in a very turbulent market.
One of your bigger, if not the biggest position now?
The biggest position is actually the SMH.
Okay.
But I began to pare that back a little bit. So, yes, it's one of the bigger positions.
All right, we appreciate it. Weiss, thanks for calling in. We'll see you back here on the desk.
Okay.
All right, that's Steve Weiss. So, nice to see you.
Nice to see you.
I was waiting to sort of get through a lot of the Apple-specific conversation so I could turn to you on more broadly, and we can pick up right where Steve Weiss was talking about. Tech, the SMH. How do you feel about tech right here?
Love tech longer term. Major secular bull market in tech, major secular bull market in semiconductors. So, Apple is part of tech. We talked about it when our analyst upgraded the stock. And what was surprising to us a while ago is how many investors were still underweight the stock. So it's not an over-owned company. And I think that's probably, if I was going to add to your story on the desk, is that it's not a crowded stock. Mm-hmm. So there's a lot of room for investors to buy it.
What about the notion of sort of growth tech versus quote-unquote quality tech?
Well, we're all about quality in a volatile market. We think quality is very important. So right now for our clients, we would be talking about quality tech. But any kind of tech over the next 3, 5, 10 years, we think is going to be a major performer within the market.
You guys agree?
Mary Ann, one of the reasons why I find your research so helpful for me, you're formerly a technical analyst, and you've become a chief strategist, and I think you do a really good job at talking about why price affects some of the narratives that we hear in the market, and I happen to believe that that's true. I also think that a lot of people would benefit from looking at technical analysis from past bull markets to better understand this one. One of the things we always seem to get tangled up with is this idea that there's a narrow group of stocks that are leading the market, and Apple being one of them, of course, over the last 10 years. But isn't that common? Like, doesn't every bull market have its leadership names, and they can continue to be leaders for a really, really long time? Shouldn't people be armed with that knowledge before they judge, oh, it's just 10 stocks driving all the gains?
Well, first of all, thank you very much for the compliment.
Well, of course,
I really appreciate it. As a technician, you always look at the breadth to see how strong the market is. And what I'm really surprised is that the breadth of this market actually is very strong, even with the lack of leadership in small cap. And so, yes, we talk about a few leaders, but it really, in this market, it's not a few leaders. We're not that far away from the highs recently in the advanced decline line. And that's stocks, only for the New York Stock Exchange. Now, as a market ages, and if your breadth actually narrows, it is a warning sign, but it's not timely. It could be up to a year before you actually see a negative market impact. But there's nothing wrong with the breadth in this market.
Where are you overall, though, on the market? Your note sounds a little more cautious than maybe you sound here.
Well, tactically, we are cautious. In fact, we said there was a roadblock to the tariffs and proceed with caution. And you're entering the seasonally most volatile period of the markets, which are September and part of October. So, and since we don't have a solid trade negotiation, and all year we've been getting a lot of volatility, we still see risk that volatility continues through September and October. Now, with that said, our strategist on the global side, his indicators are indicating that you can rally because there's so much cash on the sidelines. But we would still be a little cautious over the next few months, but we still maintain our year-end target of 2,900. Now, that's not a new high within the marketplace. That's another reason why we're a little bit more cautious. We think it's going to be a little bit more challenging to get to new highs, but also if you do get to new highs, to sustain new highs.